Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets that never cease to present us with some excitement and volatility. And this past week is no different. So without further ado, Miles, why don't you tell us what's transpired?
Boy, I tell you, Tori, there's a couple things in here you could pretty much set a clock to at this point. I mean, following on the heels of the election decline, we had our first nice bounce in the precious metals markets and commodities, a couple commodities in general we're going to take a look at, and obviously on the flip side, a reversal back down in some of the equities. So let's jump into that real quick, starting off with gold. Currently at time of recording, we're at $2,650. It's up $108 since last week, 4.3%, and a really nice bounce there. Silver, $30.86, up $1.15, just shy of gold, 3.9%. So here's one week where anything gold can do, gold does better, which I don't get to say too often.
Anything gold can do, gold does better, you said.
That's what I meant to say.
Oh, I'm sorry.
I thought it was too.
Oh.
Yeah, that's what I meant to say. Moving over to platinum, $958, up $33. That's 3.6%. Not to be outdone, palladium, following on the heels of that gigantic decline a couple weeks ago. Palladium back up over 1,000, 1,024, up $113, 12.5% in a week. Looking at the equities market, the Dow off about 670 points, down around 1.5%. S&P about the same, it's down 80 points, 1.3%. The NASDAQ pretty deep, down 500 points, 2.4%. And the Dow Transports, unfortunately, the one in these indicators that I like to keep track of the closest, the Dow Transport is off 600 points, 3.5%. And just for fun, I wanted to see how some of the other commodities were doing, so I went over and double-checked Dr. Copper. Copper's up about 15 cents, so it's around 3.8%, but I do just want to zoom in on this chart here real quick, or at least the long-term chart. We're sitting just above a pretty nice rising floor in copper, and that $4 price tag is looking real enticing to me. So I think there's a good chance that we could see some reversals pending over the next couple weeks or months. Again, like we talked about last week, we're not 100% sure that that decline is quite over yet in the metals market, where, like I said at the beginning, set your clock to it, Republican victory in office, and we're seeing exactly politically what we would have expected to play out.
Well, but we didn't expect Joe Biden to authorize landmines and long-range missiles in Ukraine. And that's what's changed the landscape for the metals.
I agree. I mean, we're looking at some of this as a geopolitical pop. As Miles always says, the charts tell you where we're ultimately going to go, but the news doesn't matter. What is the news that drives us to that point? So then it begs the question, is this a little bit of a bounce on a continued bearish correction or trend into the end of the year? And nothing has really changed other than a little bit of an increase in the fighting? Or is this the start of something? Because if you look at what happens in major corrections, okay, let's say that the stock market corrections that we're seeing coinciding with the metals going up, and we're going to get into gold, obviously, has gone up as well. That could continue. So this may be the start of something where we actually do see the equities markets come down aggressively because we do ramp up geopolitically. Like these tensions really ramp up. This is the season it could happen, unfortunately, because you've got a lame duck president, in a sense, with a very strong, carrying a big stick kind of guy coming in next. And maybe Putin does try to get away with a lot more, or maybe Biden tries to get away with a lot more, because firing long-range missiles into Russia out of Ukraine, missiles that are made in the U.S.
Yeah, these are our missiles.
Game changer, right?
Yep.
And in the meantime, he's getting real strong on telling Israel he now, as a party representative, can come against Israel very strongly, seeking a ceasefire there. And Israel's saying, no such luck. We will press on until we've beaten Hamas. And now China's gotten emboldened, and they're actually saber rattling with Japan. I mean, we keep talking about Taiwan. You got Japan. So as a result of those two regions, over the last month, the yen is down 4%, the euro's down almost 4%, right? And here are the equities markets in the U.S. dropping. Maybe.
Maybe, but look at the dollar.
Oh, the dollar's out of control.
Yeah. Miles, show us the dollar.
Sure. Well, I mean, we're looking at the dollar up almost 7% since the 1st of October, but half of that has just been since November 5th. So 3.5% on the US dollar index just in the last couple of weeks. I mean, what people need to realize, we talk about percentages like that all the time with metals and even equities, which are staggeringly larger than the metals markets. Well, the dollar isn't the Titanic. It's like a pontoon boat made out of Titanics. You know, getting the dollar to move this much, this fast is almost unheard of outside of some type of major catastrophe.
Yeah, big market corrections.
The types of rises that we're seeing in the dollar right now is insane. And we're looking at, as of a couple days ago, last Thursday actually, you're looking at the dollar at the highest individual price really in about 2 years. We had one little intraday spike last October of 2023. That was a couple pennies higher than we're at today. But man, we're knocking on that ceiling right now. And when you bring up Asian currencies because of Chinese concerns, when you bring up the euro, when you bring up some of the global fiscal alternatives for quote unquote flight capital, I think we're seeing a lot of that. I don't necessarily know if I think this is purely the average American thinking Donald Trump is going to be better for the US dollar. I think this is flight capital coming out of Europe due to fear.
I couldn't agree more. And you're looking at the BRICS nations with their proposed new currency, and it's kind of on the back burner with the different BRICS countries right now.
Sure.
It has not emerged as the competitor to the dollar, the euro, etc., like so many people thought it would earlier this year.
Yeah, and that's, again, you guys talk about usually it takes a very long time. Certainly to compete with a global reserve currency, it takes a very long time. And there's infighting there. There was a huge oil deal being done between India and Russia, and China demanded that it be settled in yuan and, you know, taking the place of the petrodollar, and India refused to do that. And it got so heated that India left and did the oil deal with the United States. So that's a good sign as chink in the armor of this BRICS alliance.
Right.
But that being said, they're still going to develop a competitor to the dollar. They just don't have it yet. And that's why China trying to bolster the yuan on the world stage. And meanwhile, of course, you've got the yen dropping and the euro dropping. Like you said, Miles, it's flight capital to the US dollar. Where does the world turn? And that's what's weird about this little cycle here is that, yes, the dollar's rallying and gold's up 4%.
And so is gold, yeah.
Yes.
And that's not normal.
No, and we see that when the stock market crashed in 2008. We saw it with the COVID pullback, and they both started rallying. Now, it took gold a little bit of time. Gold went down with equities initially, but when they're climbing together, there is something going on there, and obviously geopolitics can be one of those. And geopolitics is never a long-term bullish reason to invest in gold. No. So we could still get some pacification and continue our downward trend into the end of the year.
Yeah, and I would hope so.
Yeah, I do too.
Yeah. Well, and those are great bullet points. Gold is up. Dollar is up. There's two good bullet points at the same time. Equities market is not really down. I mean, 1% or 2% decline after the rise that we just had post-election. That's completely reasonable. So how'd that BRICS meeting go?
Oh, it was okay.
Like they're all ready to go, right?
No, not even close.
No, not even close.
I mean, it was okay. I mean, it was a photo op, I guess, but they didn't really get anything put into stone yet.
No.
Still a lot of talk.
And I think there's going to be a time delay there. I mean, before we recorded, we were chatting about this a little bit, and I kind of look at the course of the euro and the European Union throughout my life. I mean, I wasn't around, but the European Union discussion probably started back in the 60s, maybe 70s. I mean, the euro came out in the 80s to 90s, and it really didn't become the economic powerhouse that it is today until the mid-2000s. So there's a considerable amount of time to try to piece this whole thing together with BRICS. So it's not surprising to see some bumps in the road. And China isn't stupid. They don't see themselves as replacing the US dollar in the next 2 or 3 years by any means. If they did, I don't think Xi would have come out, a week or so ago, and coming against North Korea for sending troops. Yeah. They're still playing politics geopolitically because they have to. So, yeah, I think the world's going to change a lot over the next 20, 30 years.
Well, some of it has to do with BRICS growth, too. I mean, that can be a slow process. So in this most recent meeting, not a whole lot was achieved, but Egypt, Ethiopia, Iran, and the United Arab Emirates all became the latest countries to join BRICS. So they're going to rebrand to BRICS Plus because they've got all these plus initials coming in. Argentina refused, though, so they were invited, and Argentina turned them down. So not a whole lot of surprise there with Iran. You know, I'd rather they not do the plus and we just spell out a really long, strange, meaningless word with all the initials that they recruit into the thing. But anyway, we'll see what ends up transpiring. But they did get a little bit of growth. They didn't shrink.
Right. So with all of these bullet points we're talking about, what happens if we see that US dollar push above that 107 mark?
Well, then we go to 115 in a New York minute.
Because we've been there more recently.
Yeah, that's where we were 2 years ago. Okay. Yeah. And that would be wild.
That would be really wild, depending on the speed. I mean, again, we only see that when there's the financial crisis and COVID and that sort of thing. And it's not just domestically that people are fleeing into the dollar. The whole world flees into the U.S. dollar, right? So you see that if war breaks out with another NATO country, between Russia and a NATO country, then the euro plummets, right?
Well, I know Britain sent some of their long-range missiles over too, and they were used today. So it's not a good scenario. I'm just praying that cooler heads will prevail.
Yeah, no, that is the prayer, and we don't want to see 115 on the dollar index. No. You know, it takes me back to the show that we did, Miles, where you showed, gosh, the last time we were at 107, and gold was significantly lower. I mean, it was, you know, around 1900 or whatever that was. I don't want to guess on the figure, but people who are bearish and think that, oh, gold's going to correct, someday we're going to have deflation and the dollar's going to rally significantly and we're going to see $1,000 gold again or $700 gold again. No, what this is telling us is we're at 107 and gold is at $2,650 roughly. And that's because of the sheer magnitude of money printing over the last decade. It's the number of dollars in circulation. And Rob, you're a huge velocity of money guy, and the velocity of money is picking up. The U.S. dollar velocity is picking up. And I think it really starts to ramp up if you get economic stimulus with the Trump economic plan. So we'll see. We could really see the dollar rally, and gold would follow suit if this is driven by geopolitics.
Yeah.
Well, you're not wrong. You were pretty close. It was actually about 1830.
Yeah, that was back in the spring.
Which is where gold was last time we were at 107. Here's where it gets better. When the dollar almost hit 115, gold was down at 1630. So we see that type of move back up again. And I think this is the point you guys are getting at. It is a very scary world when the dollar's going up and gold is going up in terms of the US dollar, because what that means is gold is significantly outperforming the dollar. If the dollar goes up 10% and the price of gold denominated in dollars goes up 10%, well, gold technically just went up twice as much as the dollar did.
That's right.
Good point.
And the stock market is holding strong on top of that as well. If gold were going down while the dollar and the stock market are going up, I would call for economic strength in the United States. This is not economic strength in the United States. The dollar goes up to 115, and let's say gold hits 3,000 at the same time. That's gold basically or very close to doubling, while the dollar did almost nothing.
That's right. And a stronger dollar does hurt on the export side of things.
Which is one of Trump's big deals.
That's right. And it hurts on the exporting of our inflation, which is another one. And so that would actually work against him but we'll see. We're getting ahead of ourselves, but it's a fun exercise to think about, and let's see what happens. And these are exciting numbers this week, and it doesn't necessarily determine a long-term trend, but it could be the beginning of one that would be some reason to put your seatbelt on.
Well, yet the American public has not invested heavily in gold yet. We're busy, but Americans aren't necessarily buying gold right now.
If you don't own gold, you're crazy not to be buying here. If you're waiting for a dip, stop.
Yeah,
stop it, right?
Yeah.
Get your position taken, and then you can get a little bit greedier after you have that first position. If there's pullbacks, okay, buy a dip. But you don't know. You don't even know what gold's going to do. We don't know what the gold-silver ratio is going to do. It's sitting here stuck at about 85. Get your positions taken. You have to have the portfolio protection. Trump is not the save-all, cure-all in these markets.
Well, the best I think we can hope for is to gold back up another $200 from where we are now into the mid-2400s. That's the best we could hope for, to see it drop like that. But we don't know that's going to happen. Look at what happened this week with the Biden administration with their policy change in Ukraine. Gold's up $100 from where we were. So this is a crazy time. You cannot play this market cute at all, because we are looking long range over the next 1, 2, 3, 4 years. The problem with the U.S. dollar is already set in motion, and we talk about that endlessly here on this podcast. We are not in a world where the dollar is going to be king dollar anymore.
No, you can have a U.S. dollar index rally to the moon as it fails, all the way to its failure.
Yeah, crack up boom, only it's a crack up collapse.
Yep.
Yeah.
So that's going to do it again this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell, head on over to our website. If you'd like to learn more about McIlvaney Precious Metals, we can be found at McIlvaney.com. We're also on Twitter at ICA Gold and Facebook at McIlvaney Financial. Better yet, why not give one of the advisors here at McIlvaney Precious Metals a call to discuss your personal precious metals portfolio? We can be reached at 1-800-525-9556. Thanks again for listening. Hope to see you next week. Take care.